It gives us a very bullish outlook because we could go to 138K within the next 3 months. I wanted to start off again with the ETF tracker. Here we look at the daily flows of the ETFs because we have to realize that this rally or the bull market that we're in currently was catalyzed by the ETFs. So obviously the ETF demand is vital to the continuation of this bull market, which is why my focus was immediately on charting out these flows. And that's why I built the ETF tracker, which you can see here. So let's look a bit through the flows of the ETFs. Just the most important part here is that we crossed the 800K mark in cumulative holdings for all the ETFs. And BlackRock surpassed now 200K, going after MicroStrategy, which is also more or less around 200K. So I think they will surpass MicroStrategy this week for sure. So they are a big holder, obviously on behalf of others as well. And I think the flows are gigantic. We actually have seen extraordinary inflows to these ETFs, which I think are mainly financial planners on behalf of just retail families and so forth. I still think we haven't seen much institutional inflow yet, although that's difficult to check. But I think many products still need to be made available. So I only think these flows will increase over time as more and more products or kind of derivative products of these ETFs are going to be made available. And think of pension funds who are going to add like small allocations to these ETFs. As we saw actually recently with BlackRock, they themselves are going to add to their strategic fund, they're going to add like a portion of the Bitcoin ETF as well. So those are all kind of passive flows that will only increase these flows to ETFs. So that's a very bullish outlook because we're going to have passive flows similar to the S&P 500, which also has these kind of passive flows, just people that have their salary and automatically save in a pension fund with a small allocation. So this is going to generate a lot of passive demand for Bitcoin, which is going to obviously put upwards pressure on price. So that's a good outlook. We were speculating on the current outflows being related to the Genesis bankruptcy. In total, that is actually 25,000 Bitcoin from what I have seen. So it's not gigantic, but it will be sold off in smaller portions to have less effect on the market. So the question is how much of these flows currently are due to the Genesis bankruptcy. That is kind of speculating. I don't know. We will see continuous smaller outflows of Grayscale until they lower their fees because they have a 1.5% fee, which is very high compared to the competition currently. Actually today there was an announcement of Van Eck that they would charge 0 fees until March 2025. And so if you are a holder of GBTC and you can have 0 fees versus 1.5%, you will gladly switch, although you have to pay capital gain tax. I don't know for how much longer Grayscale will keep these high fees. I think they're not going to keep up for very long, but it's going rapidly from 600 to 400K in 2 months is enormous. And it's luckily offset by the other ETFs and by a margin. So maybe the next chart, which shows the same of the ETF tracker, these are the combined holdings visually. So we can see now that the other ETFs actually surpassed Grayscale in the holdings. Grayscale went below 400K holdings and the other ETFs just recently now went above 400K holdings combined. That's a big news. And the most important chart of the ETF tracker. So this is the growth rate of the combined Bitcoin holdings. So we're actually looking at how much inflows are we seeing per day, because that is actually the important part. If we think of like how much pressure will be put on Bitcoin's price, we kind of want to know in BTC terms how much Bitcoin is bought each day, and also what we can say from the trajectory that this is following. So this is actually the daily change of the combined Bitcoin holdings. So we could look at it as the growth rate, especially since it's mostly positive. So here you can visually see there's the dark green line with it has 2 spots where it goes into the red territory. So it goes below 0, the growth rate. So that is the first one is due to the FTX outflows. And the second one is then potentially because of the Genesis bankruptcy. Now, in the gray area in this chart is the GBTC position. And the blue one, the blue area are the combined 9 other ETFs. So we can see actually that they offset each other quite a bit. but in general, these 9 ETFs accumulate more Bitcoin than is flowing out of GBTC, and therefore we get this positive green line and quite a bit. So if we look at the average flow, which we can actually see that on average 4.1K as of today is flowing into these ETFs, which is an enormous number. If we think of the first halving, is that the pre-halving one, we actually had a supply issuance of about 7.9K Bitcoin per day. So nearly 8K Bitcoin per day were added to the Bitcoin network. So there's a very high inflation rate. Until the third halving, we had 18 million coins that were issued. So that's a very large number. Now, with the first halving, we went from, instead of nearly 8,000 Bitcoin per day, we went through 3.6 or so. And currently, we're seeing 4K Bitcoin per day as an inflow as of the ETF approval. So you could say that the ETF approval is in the same order of magnitude as the first halving, which is gigantic. Now, obviously, there's a difference. The ETF is a supply shock versus the ETF demand is a demand shock. With a supply shock, it's very consistent. It's just defined in the protocol. From now on, we have 3.5K coins less per day that are added to the network. So it's a very consistent flow. Whereas with the ETFs, it can fluctuate all over the place. So we can have a 10K inflow on a day and a 4K outflow the other day. So that has obviously more volatility to Bitcoin's price. But in general, the outlook is very positive because the ETFs, they have to penetrate the broader market. So we can assume that these flows will actually increase, at least in dollar terms. Perhaps in Bitcoin terms, they might go down as the Bitcoin price will move up due to the pressure put by these flows. With the fourth halving, we will go from 900 coins a day to 450 coins a day. So if you compare the 450 to 4,000 coins a day, that's an order. So that's why I also think like we could see actually this ETF approval as the main catalyst for this bull market, rather than usually traditionally always the halving was the catalyst for a Bitcoin bull market. So as you can see, even in this chart, the flows, the vertical line there at the beginning is the ETF approval, where you can see immediately this huge inflow happening. Before that ETF approval, it was just the GBTC position, so that the average line there is more or less flat. And then what we can see also in this chart is that the halving is coming up. So that's another shock that is coming, a small shock relatively to the current inflows of the ETFs, but that is the fourth halving. So we're actually seeing the ETF approval, which is of similar kind to the first halving, and a fourth halving within a time span of less than 4 months. So that is very bullish for the Bitcoin bull market. After the halving, we might see a pullback. To be honest, a 30% pullback in a bull market is normal within Bitcoin. We haven't seen a decent pullback, at least since 40K up until now. It's because of these consistent inflows that are putting so much pressure on price that even a small pullback is not really possible. And the question is, will we get a larger pullback of a 30% one? I'm mentally prepared for it. I think that is smart anyhow. But not necessarily, considering these ETF inflows are not likely to reduce at any moment in time. Yeah, let's maybe continue to the next chart, which is the spiral based on the halvings. And a full rotation in this spiral represents a period of nearly 4 years, a bit less. And so on the vertical line there in the top, you can see the halving dots. So each cycle starts with a new halving. And we can see that soon after those halvings, we get actually all-time highs. So the blue dots there that are marked within the price. And then we get a cycle peak there in the bottom, in the southeast. We have the peaks usually. And then we have the troughs. The bottoms, they happen there in the southwest. So we make a bottom and then we get long periods of just kind of bear market. It's the worst of the bear market has passed. It's kind of recovery, I should say. Still at a slow pace. It feels stagnation during that period, and then usually the halving is again the moment that people are starting to get a bit more hope, at least because of the supply shock from the halving. We started then putting more pressure on price, and we would make an all-time high soon after the halving. This time we have the first blue dot, the big dot, that's not the halving dot where the current price is, it's an all-time high. We can see that we actually have a bit of a left translated cycle because we have now all-time high that happens earlier within the rotation of the spiral. And obviously we can say that this is because of the ETFs. So that has been a major catalyst for Bitcoin. This time not in a spiral shape, but we just plot them here next to each other, and we scale actually the previous cycle percentage-wise to the current cycle. But we line the cycles here. That gray vertical line are the halvings and the ETF approval for the current cycle. So actually the cycles are all aligned by the halving, just as we did with the spiral chart. But because the ETF for the current cycle functions more as a catalyst, I aligned the current cycle by the ETF approval. And we can also see the magenta vertical line there is the next halving in this chart. And if we align it this way, we can see that we're following a similar shape. We're moving up in price since that ETF approval, and for previous cycles it was the halving. Now the duration of each of these cycles for reaching an all-time high is a bit different. Like some take 100 days or some take even as much as 250 days or so. That is because obviously due to many factors. The intensity of the halving itself is one of those, but also the macro landscape. Is there a high appetite for risk assets or not? So this all has an effect on when that first all-time high will be made. So the new chart that I want to display is the Bitcoin cycles aligned by the previous halving. We're actually here, instead of aligning the cycles by the halving and the ETF catalyst, aligning the cycles by the moment in time that the previous all-time high. And I think this is a very good alignment to look at the cycles currently, because we just made an all-time high, and so it's the best view to compare the bull markets. So we can see that the next 3 months actually look very bullish. If we draw a line here, let's just imagine like that the price will double from the all-time high. So in this case, from the 69K peak from the previous cycle, that doubling would be $138,000. When would we potentially reach that line? If you look at the performance of the previous cycles, that was all within a range of 3 months. So the question is, will we do the same or will this time be different? I think the days is, it ranges kind of from 39 days to 90 days. The blue area here, which is 3 months more or less marked since the previous all-time high. But you can see for each cycle that we surpassed the doubling. And it gives us a very bullish outlook because we could go to 138K within the next 3 months.